Hey traders, welcome back to the weekly Forex Forecast. Coming up this week, we've got a big week because on Wednesday we have US CPI and the big one, which is FOMC coming up on Wednesday. And what happens in FOMC is likely to dictate the next directional moves, not just in the dollar pairs, but in Forex in general because of the reserve currency status of the US dollar. Now, last week was a very interesting week. We did have interest rate decisions out of Canada and out of the EU, which we're going to talk about in today's video as well. But the big piece of data last week was US non-farm payrolls. And we had this kind of quiet week leading into it, and then we had the big reversal to the upside. And the reason was because we saw a beat in the non-farm payrolls number. We did see the unemployment rate going up as well. So it was somewhat of a mixed report, but the overall reaction we can see from the close, not just of the dollar, but of the bond market as well, is that they took this as a higher for longer print. And the reason for that is because the FOMC meeting coming up this week could very well be swayed into an early rate cut if there had been a significant deterioration in the unemployment rate. This is what Jerome Powell had stated previously. If there was a deterioration in the employment outlook, then the Fed would be more inclined to cut rates. This didn't materialize, and therefore the reason why we've seen this rally in the dollar and we saw the bond market taking this as a higher for longer release or print is because it's most likely now going to keep the Fed in a kind of slightly higher for longer mode on Wednesday. And so going into this week, I do think we're going to get a continuation in the US dollar. I do think the Fed will be forced to hold rates into Wednesday's meeting and perhaps take a little bit more of a higher for longer stance. And all of these setups that we're going to be looking at in today's video, these are real setups on my watch list that I'm going to be looking to execute on and post to members next week. In fact, this non-farm payrolls rally, I traded this last week, posted 2 setups to members on this, traded this successfully. And in fact, right now we're on a 13 setup win streak. And if you guys want to see how I do this in real time, you feel free to join us in the room during the week at the GMT website. All the links and information can be found in the description and the pinned comment below. Okay, so moving on to the all-important portfolio selection part, you can see that we have the pound, the franc, and the US dollar sitting as the top 3. But if you actually look at the performance metrics of all of these, apart from the CAD, which is below 50, they're all kind of in neutral territory. They're not super bullish, super bearish. Again, it's only the CAD which is really an outlier here as a very good short idea. So certainly the Canadian dollar shorts are a #1 theme heading into next week. And also Euro shorts are the second, alongside the Canadian dollar, second short theme that I'll be looking at next week. Now, to understand why I think they are not just good themes, because obviously they're here in the performance metrics as 2 of the best shorts outside of the yen, but I'll talk more about the yen in a minute. We have to go back to last week and look at the steps leading up to this interest rate decision out of the US on Wednesday to get a handle on what's probably going to materialize next week in the Forex markets. Last week we had first the Bank of Canada meeting. They cut interest rates. So last week we had an interest rate cut out of Canada, followed by the ECB meeting where they also cut interest rates. We then get to non-farm payrolls on Friday, which we've already looked at, and the data comes out hotter than expected, albeit with the unemployment rate ticking up. And the market takes that as the Federal Reserve are almost certainly going to hold rates now on Wednesday, putting us into the position where the Federal Reserve is in still a higher for longer mode. For how long, remains to be seen. But at least for now, the Federal Reserve are going to be in a higher for longer mode if they hold rates, which looks likely now on Wednesday because of this jobs data. And at the same time as the Federal Reserve being in higher for longer mode, the ECB, especially because the euro makes up 57% of the dollar index, but the ECB and Canada are starting to cut. So now you've got this divergence between policy, the Federal Reserve, where they're holding rates, and Europe, Canada, where they're cutting rates. So if, as looks likely, the Fed are going to hold on Wednesday, and we are going to see more upside as money is attracted into the US dollar on that yield differential, as yields in the US remain where they are, and in Europe, Canada, other countries, they start going down. And basically we've reached the point where this idea that other economies can outhawk the Fed has been put to bed. You know, the Federal Reserve and the US economy is ticking over stronger than other economies. And on a relative basis, that is now being shown in the differentials in the interest rates. So you take that situation up to Wednesday and you can see now the picture being painted and why we got that big reversal to the upside in the US dollar on Friday. Because we're about to go into, almost certainly, unless we get a very unexpected rate cut, we're about to go into a divergence of interest rate policy in the US and elsewhere. So with that in mind, I do favor US dollar longs from the interest rate decision. Primarily, I'm going to be looking at the US dollar to the long side versus the CAD, the US dollar to the long side versus the euro, and the US dollar to the long side versus the New Zealand dollar. Now, I'm leaving the Japanese yen out once again next week in terms of the weekly Forex forecast because we have the BOJ on Friday. You may be able to trade, you know, around during the week, kind of range trading it, but with the BOJ on Friday, it's not necessarily the best opportunities. So I think there are better opportunities to look at instead of the yen pairs next week, and that's what we're going to be going through in today's video. So outside of US dollar and New Zealand, so New Zealand dollar to the downside, euro dollar to the downside, something we looked at in last week's video from the upper bound, euro did reverse, and also US dollar CAD. Going to be looking at those three. We can also look at a scenario where we get a bearish response. So the overriding plan is a bullish outcome for the dollar on Wednesday, based on everything we've discussed. But we can also look at plan Bs. So if that doesn't materialize, we can reactively look at maybe US dollar franc to the downside, pound dollar to the upside. We can have these two as kind of plan B setups. But the plan A is for dollar strength next week. Now, if we get that, what's going to come into the rest of the Forex markets? We're likely going to see risk off flows. So I'd primarily be interested in risk off setups. Now, going into next week, the Swiss franc is a safe haven asset. If you're buying the Swiss franc, that is risk off. So CAD franc to the downside fits very nicely there. Euro franc to the downside is a risk off play. So I would be looking at that again next week. I'm going to look at that in today's video. And also New Zealand franc to the downside is something you can look at next week. And I do have my eye on, and I think that is also going to be a nice risk off setup we can look at, especially if we get higher for longer in the US on Wednesday and we start to see the dollar strengthening and the risk off moves that come with that. And finally, then we also have the pound, which is not in and of itself a particularly risk on currency. However, we are sitting at the #1 spot this week. So I am going to be trading the data as I see it. Pound CAD to the upside, euro pound to the downside, although that is actually slightly a risk on setup. So out of all of them, that's the really only one which is kind of risk on. And New Zealand pound, or pound New Zealand to the upside, which is of course a risk off setup. So going into next week, those are the setups I'm going to be looking at, starting with the basis of high for longer outcome on Wednesday, dollar strengthening, looking for the dollar to the upside versus those weaker currencies, and then also the other risk off moves that would come into the market from that, I think are also going to set up nicely as well. So those are the setups we're going to be looking at in today's video. Okay, so let's have a look at the watch list, starting with crude oil, as we always do every single week. And does this chart need any further explanation? Pretty obviously in a massive bear flag here, and I would only be looking for shorts or doing nothing in this market. I cannot buy this market next week. So simply put, any continued pullback, I am going to be looking, and you can start to look for that intra-week breakout. So in the 4-hour chart here, very often, the reason we're analyzing on the 4-hour chart, generally speaking, you get, very similar to this kind of sell-off, you get a breakout in the 4 hours, often a pullback, and you usually get one, sometimes two, but usually one kind of bear flag or bull flag during the week. So you can look for that, and what I'll be looking for as a preference, I like to fade these moves. This is what we go through with members. If we breach the 78.65, I am going to be looking, there's a nice high here, I am going to be looking for momentum to fade. I'm going to be looking for a 1 or 2 day reversal to the downside. If we breach here, say you get involved with a short and we breach here and we test the 81.71, this is actually a second place you can look for shorts, and it's also a good level, good area to cost average your initial position if the initial position doesn't work. And the reason for that is because of the increase in probabilities. You have roughly a 7 out of 10 chance of reversing above this level, back inside this range. and you have a 95% chance, or roughly a 70% chance, roughly a 95% chance if you breach this level of reversing back inside. So it offers an increased area of probabilities in terms of a short, should the first position not work out. And I do that quite often with members during the week. So the first dollar pair we're going to look at is US dollar CAD. And we're going to start with the dollar pairs, and we're going to look at the ability to potentially trade this both ways. Now, US dollar CAD, for reasons identified already in the video, I only want to have a long bias on this. I can't short this market next week. I can buy it or do nothing. I can short other dollar pairs, which we'll discuss, but I can only buy this market. So I'm going to be looking for one of two things. I'm going to be looking for this market to pause, correct, and pretty much do nothing. You can see we're breaking out of this kind of big consolidation pattern. And I'm expecting this not to do much into Wednesday, and then we're going to get CPI followed by the Federal Reserve. Once the Federal Reserve meeting is out of the way, what I'm going to be looking for is one of two things. Either we start to break out straight away, and you can actually look for that breakout, that kind of bull flag, pull back on a rally into the 1.3859, and this would be a good profit taking area above this level. Or I'm going to be looking for this market to sell off, and it could be for whatever reason. I mean, you could get the Federal Reserve coming out holding rates 5.5%, and the market just kind of has some volatility because of just some repositioning around that. You come down, you take out the lower bound down here, and then you start to fade, and I'll be looking for that reversal for 1 or 2 days. If we get a really weak dollar, you can also potentially look from the second bound if you get a kind of bearish catalyst. Very often with news events, you will see these markets go to their second bounds. So only 5% of the time does that happen, but generally speaking, if you have a news catalyst, that will make up that kind of 5% of the time. So if we do get a steep sell-off, you can also look to step in and buy for 1 or 2 day reversal below the 1.35766, but it would probably only do that on an unexpected rate cut. Next is euro dollar. Now, again, in the same vein as we just looked at in US dollar CAD, I'll be looking at trading this. When you get these kind of interest rate decisions and you have this kind of structure and the probabilities outlined here in the Hedge Dash platform, you can really break it down to more or less 3 setups. The first setup is any pullback, this market just consolidates into Wednesday. We have CPI and we have FOMC, and you get the bear flag setup. Kind of sells off, market pulls back, and looking for a follow through to the downside. So this is essentially if you get a bullish response or a hawkish outcome. So hawkish is bullish for the dollar. If you get a kind of neutral response, what can very often happen is you can get this kind of poking above the 1.08841, and that gives you your second setup, fading for 1 or 2 days once we start to breach the 1.08841, because overall, I mean, let's say they hold rates, they come out, they talk about, if the unemployment rate deteriorates, they're going to have to cut rates. And so we get a little bit of a weakening in the dollar, but actually they've still held rates, and we still have this increasing differential in interest rates now between Europe and the US. We breach the upper bound, you can say to yourself, well, this isn't really bearish for the dollar. So we start to break above this level, we can start to fade it for 1 or 2 days. So that's your neutral outcome in terms of the event itself. And if we get a bearish outcome and we get a sharp rally, you can actually look to fade that above the 1.0966 for a 1 or 2 day reversal as well. So bullish US dollar outcome, looking for that bear flag setup. Neutral outcome, shorting above the upper bound. Bearish dollar outcome, you can, if you want, you don't have to, but you can consider shorts above the 1.09661. Next is New Zealand dollar. Again, I can either short this or do nothing. I cannot buy this market next week. So I'm anticipating, we've got this kind of momentum, I'm anticipating a correction consolidation into Wednesday. If you get a bullish outcome from FOMC, you can look for the bear flag setup, that kind of sell off on the event. Pulls back maybe overnight, and then you get the follow through into the 0.60302. If we get a neutral outcome and we start to breach the 0.61748, this is where I'd be looking for a 1 or 2 day reversal to the downside. And if we get a bearish outcome for the dollar and we run all the way into the 0.6247, this is the second place on that outcome. You could look for a 1 or 2 day reversal next week. Okay, so just wrapping up the dollar pairs with a couple of plan B setups. Now, what I anticipate is the pound moving down towards its lower bound next week because we get FOMC coming out, with a hold, and we get a strengthening of the dollar. That's the plan A. However, it's nothing wrong with having some setups to reactively trade in the opposite direction. And if we get a weaker dollar from FOMC, let's say you got a surprise cut, which again, I think is unlikely, but it's always good to be prepared. then I would be looking to short the dollar versus a couple of those stronger currencies like pound dollar, US dollar franc. So I would be looking in that situation for consolidation. And then if you get the weaker move, you can have the drive higher off of FOMC, the bull flag set up, and a move into the 1.28304. Again, I'm not anticipating this is going to happen. I am anticipating a correction and a sell-off, just like with euro dollar, just like with New Zealand dollar. But if it doesn't materialize, this is one that you can also look at to the upside as a kind of plan B setup. And the second plan B setup would be US dollar franc to the downside. So we're just making the statement. If we're wrong on that on Wednesday, and in fact we do get a much weaker dollar, we can flip and we can pivot to some markets reactively to try and take advantage of that. So what I would be expecting then is for the US dollar to kind of consolidate, pull back, and if we get that weakness and you see the dollar selling off, you can look for that bear flag set up in US dollar franc to the downside into the prior lows and below the 0.8889. So pound dollar and US dollar franc are just simply in the back pocket. Should we get weakness from FOMC, gives us at least an opportunity to try and capture something in those markets. Okay, moving on to the franc pairs, because US dollar Swiss franc was just a kind of plan B setup. It's not one of the primary setups that I'm looking at next week. But moving on to the primary franc setups, CAD franc is my favorite to the downside out of these franc pairs. Really nice momentum, consolidation already. So I'm going to be looking for one of two things. I'm going to be looking for the market to pull back. You can, as always, if you want to, look for that intra-week breakout, that kind of bear flag set up and a follow through into the 0.6460. And remember, you're not going to get setups in every market. The idea is to have a number of assets, a number of markets across the board that we're monitoring so that when setups occur, we can execute on them. But you're not going to necessarily trade every single market every single week. So if we get that, you can look for that bear flag setup. And I'm going to also be looking, if we breach the 0.65650, this is what I really want to see. And if we're going to reverse for 1 or 2 days, that's the setup I'm going to be looking at capturing. And as always, if we blast through here for some unexpected reason, and we're in that kind of 5% of the time that you breach this level and you move all the way up to this level, you can also look at the 0.6617 for a second area, even a cost average area if you're already involved, but a second area for a 1 or 2 day reversal in CAD franc next week. Next is Euro franc. I can either be a seller or do nothing in this market next week. I can't buy it. I do think we're probably going to get snapped back to the upper bound because the hedge dash systems are showing this is a little bit crowded to the downside, and very often that tends to snap back and reset. So coming into next week, I do think we're probably going to come and test the upper bound. If we break out before that, as always, reactively, you can look for that kind of bear flag, reactively, because you get the momentum first, and then you can reactively look for the trade on the pullback. You can look for that sell-off into the 0.9617. But I do think we're probably going to breach the upper bound at the 0.97521, and this is going to be a great place to look for a 1 or 2 day reversal. If we blast through there and you get into that kind of 5% of the time it does that, the 0.9819 is the second place I'll be looking for a potential short in this market next week, and probably will be a cost average if I get involved here and I'm wrong. And the final franc pair is New Zealand franc. Again, I can either short this or do nothing. You can see a nice developing downtrend. So any pullback in this market, I'm going to be looking for a breach of the 0.55290. If we break out before we test that, you can look for that kind of bear flag setup into the 0.54148. But if we breach the 0.55290, I'm going to be looking for a 1 or 2 day reversal to the downside in this market. And of course, we blast through here and test the 0.5586. This is the second place you can look for a 1 or 2 day reversal above this level heading into next week. Okay, so wrapping up the Forex universe with the pound pairs before moving on to gold and silver next week. Starting with pound CAD, I can either be a buyer or do nothing. What I would like to see is I'd like to see this kind of bull flag set up, pulling back. I've already got a bull flag, pulling back to the 1.73869. If we breach this level, I am going to be looking for a 1 or 2 day reversal to the upside in this market. If we break out before we test this level, that sets up, again, your kind of bull flag setup intra-week. You can look for 1, drive higher, pull back, and then a rally into the 1.76305. And the second place to the downside next week I'd be interested in a potential 1 or 2 day reversal is below the 1.7265. If we breach this level, I'll also be looking for a 1 or 2 day reversal to the upside in pound CAD. Next is pound New Zealand. Again, I can either buy this or do nothing. Selling this market is not an option. And we've had this kind of downtrend, we're lacking momentum. And look at this momentum to the upside. Momentum precedes price. So this tells us a very good chance of continuing higher next week or in the subsequent weeks. So any pullback in this market, I would be looking for a breach of the 2.0672 primarily. If we break out before we test here, you've got that momentum, pullback, kind of follow through to the upside into the 2.10156. You can look for that bull flag setup. But if we breach the 2.06724, this would be a great place next week to start to look for a reversal to the upside. I usually look to capture 1 or 2 days worth of move, but you could also potentially hold this one for a bit longer because this is an initial breakout. This looks a bit like a one wave. Could be going into a third wave, but I usually just like to trade for 1 or 2 days worth of movement. So we also have the 2.05, but really, I mean, if we come down and break this low, we're now going back into a downtrend. So you can look for an entry below the 2.05009, but that would probably only be, I'd only probably buy this one if I got involved here and it didn't work, and I'd probably be looking for this as a cost average. But you can still look for setups to the upside below the 2.05009 just for next week. And the final Forex pair before we move on to gold and silver is Euro Pound. I can only be short or do nothing next week. Buying this is not an option. So if we start to pull back, I will be looking for a breach of the 0.85339 and a test of this high. That would be great. A great place to start looking for a potential reversal. If before we pull all the way back, we start to break out, you have your potential bear flag set up. You get that momentum, you get the pullback, and you get the sell-off. And of course, if we do breach the 0.85339, this is where I'm going to be looking for 1 or 2 days reversal to the downside. And if we blast through here, whether I'm involved with a short already or not, we blast through here and take out the upper bound at the 0.85748. This is the second place next week. I'll be looking for a potential 1 or 2 day reversal in Euro Pound. Okay, so wrapping up the video with gold and silver, and on balance, because of what we've discussed and the outcome of FOMC likely, not guaranteed, but likely being bullish, I do favor shorts and I do favor dollar strength next week. So we're starting with silver because I would like to set up gold and silver so that I can reactively try and take advantage of FOMC. So it's not really about predicting where they're going to go. It's more about having them structured in a way that I can try to benefit from either outcome of FOMC next week. So I'm going to be looking at short silver and potentially long gold setups. So in terms of silver, I would expect this to kind of consolidate. And again, if we get a kind of neutral outcome on FOMC and we breach the 30.58, this is going to be an area I'm going to look for a 1 or 2 day reversal to the downside. If we blast through here for whatever reason, I am also going to potentially be looking at the 31.89, whether I'm involved with a short or not, as a second place next week for a 1 or 2 day reversal. And of course, if we blast through on FOMC, you know, we get a much stronger dollar and we just sell off like this, you can look for that pullback and sell off into 27.96. So I'm either going to be short or doing nothing in silver next week. Buying silver is not an option for me. I'm wrapping up the video with gold, and again, if we get dollar strength, there's a very good chance we see gold and silver coming down. So I'm not predicting gold to go higher. What I'm saying is, if I'm wrong and we don't get dollar strength and we don't necessarily get the setups in silver, at least in gold and a couple of those other markets like pound dollar, US dollar franc, we can kind of pivot to dollar weak setups if need be. So what I'll be looking for is, I'll be looking for this to continue down potentially into Wednesday. And if we get a weaker dollar, you can see a breakout to the upside in gold, and that can give you your follow through into the 22390. And if we come all the way down and we're in this area and we get a kind of neutral response and we break the lower bound, instead of going and buying silver, I would prefer to potentially look at long opportunities in gold. And of course, if we break all the way through here and we come all the way down, test the second lower bound at the 2202, this is the second place next week. I'd be looking for a potential buy opportunity just next week in gold. But I do favor US dollar long plays next week, and I would prefer to short silver than to buy gold next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com.